everyone to our next segment of ethics, to our last segment of the ethics module. So in this segment, we'll be finishing off with where we left off and wrapping up the module and going over the key things that we have missed so far. So we'll be talking about the claims process in this module, in this segment. So looking at when somebody is filing a claim, what do they need, how long does it take, and what that application and process looks like. And then we'll be ending off with what are some of the things that are prohibited in the ethics code, and what are some of the things that you should be doing in making sure that you're doing the right thing, and things you should refrain from. All right, perfect. So let's go ahead and start off with the claim section. So when we're looking at the claims, how do the claims, what is the process for this? So the first thing you will need, is to have a proof of claim, right? So this means that the person who is filing the claim, if they're trying to get the benefit on the other end, they have to show that the life insured has passed away. So they would have to provide, in most cases, it is a death certificate that would show, and that is the proof that that person has passed away. So they have to provide that proof. And also they would have to give the identification. So just to verify that they are the beneficiary, they are who they say they are. And if the documents are all fine and everything is submitted, it doesn't usually take that much time. Only if there's some sort of conflict that comes up or an issue that might arise that might lead to more delay. So we're looking at 30 days to pay the claim after all of the documents have been submitted to the insurance company. It takes about 30 days to get the claim. And usually if it's past that, it's considered a delayed payment. But within 30 days, they should be paying the claim. Everything is on the up and up, and there's nothing wrong with the claim, right? If there is a conflict, and the conflict usually occurs that even for exam purposes, that if there's two claimants, let's say the person said their niece Tabitha, and that's all the beneficiary, and maybe there's two nieces with the same name. Now who's the real beneficiary? So if that kind of a conflict comes up where they're unsure of who the beneficiary is, or the insurance company doesn't really know who to pay the benefit out to, it gets paid to the court. Right, so the insurance company has paid their benefit, they've done their part. Now the benefit will go to the court, and the court will decide who is the real beneficiary, right? So that might happen if a conflict occurs. But usually, for exam purposes, the most likely question is how long it takes, which is 30 days after they've received all the paperwork, right? So claims process, it's not too stringent, like the section in the book is not too long. They have to provide the proof of the death of the life insured, proof of the identification of the beneficiary, and once all those documents are in, it takes about 30 days for that claim to be paid out. All right. Okay, so moving over now to our last section. Now the last section talks about what are some of the things that you should be doing as an agent. How should you act in good faith? So you always need to make sure the client's interest is put above all else. You're acting with integrity, with honesty, and with competence. So those are the three sort of pillars that they want the agent to have. And honesty, of course, we know that you're not misleading anyone, not doing anything wrong. Integrity, doing what's right for the client. And competence, it just means that you are qualified. So by going through this licensing process and by being licensed by the government of Ontario, because it's a provincial license, just like driver's license and all of those. So by being licensed, you're showing that you are competent, that you have done the training, you've gone through, the course, and now you know what you're talking about, right? So that would be acting in good faith. All right, now there's a bunch of different unfair practices that the book talks about. There's a lot. We're going to go over some of the most popular ones, especially for exam purposes. And remember, again, you are able to find these very quickly in the book, and in our exam sessions, in our live exam sessions, I'll show you exactly how to find, what the question is asking for, how to find that information. So you use it, you do it in the most efficient manner. Right? We don't want to waste our time. So let's go over some of these different practices. So the first one is tied selling. And what tied selling is when you're tying two products together, just like the name suggests. So when we're looking at the different products, all products need to be standing on their own. What that means is that you cannot say to your client that I can only give you this if you buy this, right? So you cannot put two products together. However, sometimes people do that, and that's an unfair practice that you're not supposed to do. So you say that I can only offer you this rate if you also buy this product. So you're tying two products together. This is not allowed. It's prohibited in the industry, so you should not be tying two products together. Each product needs to stand alone on its own, right? The next one is called churning and twisting. They're together because they're very similar with just a small difference. So churning is when you make or you ask your client to change, just maybe let's say you're a new licensed advisor and you want to get, you want to get the commission. So you say, okay, why don't you drop your product that you have and buy that product from me? If this is done in the same company, so let's say they were with ABC Insurance and you're also with ABC Insurance, and you say, okay, drop that product that you have with ABC Insurance that was issued before, and now you are going to be issuing it to them again. There's nothing wrong with that if it's in the best interest of the client. If the product that they have is working fine for them, you don't need to change it. You don't need to, cancel or do another one. Then you're not doing it in the best interest of the client, right? So then that's called churning. Maybe when you're just doing it just for your own benefit. If it's within the same insurance company, it's called churning. If it's with a different insurance company, different insurer, then it's called twisting, but you're still doing the same thing. You're asking them to drop their product and get it from you. That's the only difference. Is if it's the same insurer, it's called churning. If it's a different insurer, it's called twisting, right? So if the product that they have is working well for them, they don't need to change it, they don't need to cancel it, then obviously that's an unfair practice that's being done, right? You don't want to do that. Premium rebating is the next one. So this one is when the agent is giving a rebate. So you tell them that, okay, if you buy this plan from me, I will give you a rebate. I will give you a certain amount of the premium back. So you're kind of enticing them to buy. They don't really need it or they don't want it, but you're making them buy it. So that is forbidden. If the client wants the product, they should be able to afford it on their own and pay for it and buy it on their own, which is why the insurance company checks what their income is and if they are able to sort of carry forth that expense, right? So they have to be doing it on their own. You cannot promise them a profit or a part of the premium back if they were to buy that product from you, right? So that's known as premium rebating, if you're just enticing them to buy and giving them a certain portion back, right? Very frowned upon, and it's an unethical, prohibited practice, so you don't want to get involved in that. The next one is called trafficking in insurance. And what this unfair practice is you are acting as a broker, right? So you have somebody who wants to sell their insurance policy, which is illegal in Canada, and somebody who wants to buy the insurance policy, and you're bringing them together. So you're kind of making that match for them to buy and sell that insurance policy. And that is something that should not be allowed, is not allowed, sorry. So why would somebody want to buy and sell? So usually some policies, whole life policies or other policies, they have a huge reserve. If over the years you've had the policy for a while, you build up a huge reserve in the policy. So it can go into like 80,000, 100,000, depending on the policy. So sometimes people can be in a need or financial difficulty, and they may be trying to sell the policy, so someone will have access to those funds and in return give them money. So that is prohibited. It's illegal. You're not supposed to do that. But that is what trafficking means, if you're bringing those two people together and you're initiating that purchase. All right, fronting, the next one. So fronting is now when everyone, so when you're doing this, when you're in this industry, you have to be licensed, which is what everyone here is going through that licensing phase. You're making sure that you are competent enough to do what you should be doing. So fronting is when you're sending someone on your behalf who is not licensed, and that's a big no-no, because you are the advisor. You have to be there to give the proper advice. You have to be there to observe what's happening, and you have to sort of make you have to physically be there, right? So you cannot send someone else. And usually, for exam purposes, they make it sound very innocent, that, you know, Kelly is a very busy insurance agent. She has a lot of clients. So she sends her assistant to go fill in the application and do all the paperwork, and then she'll just sign it when she brings it back. Right, so you cannot do that because the assistant is not licensed and you have not witnessed anything yourself, right? So fronting is when you're sending someone else on your behalf and you're not actually doing that on your own. And then the last one, there are more in the book, but these are some of the most common ones that we see for exams. So I'm just sticking to the most common ones, and then you guys can do a quick revision from, just read them over. The last one is delay in delivery. Now, why does it, if you remember from our previous segments, we talked about when the policy is delivered, that's when that 10-day free look period starts, right? So it's very important that the policy is delivered on time. And also the policy is not enforced until it is delivered. So it has to be delivered and the payment has to be made. So those two things have to be there for the policy to be enforced. So if you, let's say a policy gets approved in 2 weeks and the agent just delays it, okay, I have to go to vacation, I have to do this, I have to do that. And they made an unnecessary delay in an actual delivery of the policy. And if anything happens to the client in that time, that is because of the agent's fault, right? So the insurance company had approved it, let's say January 1st, but the agent didn't deliver it until the end of the next 2 months, then that's a problem. Right, so you don't want to delay, you want to make that prompt appointment to deliver the policy as soon as it is approved. So the client has that policy and the 10-day look period can start and their coverage can start, right? So we don't want to do anything that's going to delay that. So these are the unfair practices. And the final thing I want to end off with today with our ethics module is just talking about E&O. So E&O stands for errors and omissions. Every agent who is licensed in Canada has to have, you know, it's insurance for the insurance agent, right? So kind of like when you drive your car, you can't drive a car without getting insurance on it. It's illegal. Same thing. So this is kind of what is covering the agent. So what, now we talked about all the different regulating bodies, if you remember in the previous module, that help protect the clients and their interests. Well, what about the agent? What is protecting the agent? So that's where E&O comes in, and every agent has to have E&O. And this is protecting the agent from, you know, if they're getting sued or they get into any sort of trouble. This is the coverage that the agent has, and it is mandatory. Everyone will have that. All right. So that is our ethics module. I hope it made sense. I hope you guys are able to understand. So we went through the entire, all of the core concepts from the book. The other modules will be a little bit longer because those books are longer as well. Ethics exam has 20 questions, whereas the rest of the exams have 30 questions, all multiple choice, and you have 75 minutes, right? So we want to make sure we're targeting our time and we are using all of that to our best of our ability. All right, thank you so much for joining me, guys. You feel free to rewatch any of the segments if you need to, if it doesn't make sense. And then join in on our live exam prep classes where we will work through questions which are very, very similar to your exams and work through how to solve them and work through how to use the book as well. And the website has a lot of great resources. There's more exam preps or study notes. So if you do have the time, do check that out as well, and it will definitely help. So thank you so much, and I'll see you guys in the next modular segments.